I'm pleased to present St Barbara to you today. I'd also like to apologise for Bob Vassie, our Managing Director and CEO, who is unable to join us today. I draw your attention to the usual cautionary statements, which you can review at your leisure on our website. I will cover a number of areas of interest as highlighted in this slide through this presentation. It'll be a very high-level presentation though. I believe most of the audience should be quite familiar with St Barbara, but to refresh those that are not, St Barbara is a ASX-listed gold company which own and operate two gold mining operations, the one in Leonora, Western Australia, and the other on the Stean Island in Papua New Guinea. We have a market capitalisation of 1.8 billion. At the end of the financial year 18, we reported a cash balance of 343 million Aussie, and that balance continues to grow today on the back of our efficient operations. The company is importantly completely debt-free. Production for the group exceeded 400,000 ounces in financial year 18, and we operated at an all-in sustaining cost of below $900 an ounce. As a group, St Barbara has a very keen focus on safety performance, with our total recordable injury frequency rate as our internal key safety measurement having remained very low over the past 3 years. These TRIFR numbers also relate to very few low-severity incidents. Our performance, when comparing that to other industry metrics in a lost-time injury frequency rate, further demonstrate the company's dedication to achieving safe workplace to everybody that comes onto our sites. Notwithstanding these results, there is still considerable focus for us on further improving our safety leadership and our safety culture across our group. We believe zero injuries are possible, and the low severity incidents that we have experienced gives us comfort that we can achieve that. Looking very briefly at some of the financial metrics for St Barbara's recent performance, I note that in financial year 18, we had a record year for production, a record year for cost performance, and a record year for operating cash generation. Our EBITDA margin for the group was 51%. Our Gwalia margin was 62%, and at Stean Barrie we recorded a margin of 44%. We used our cash at hand and also the cash we generated through the year to advance our organic growth projects, fund exploration, and then also return cash to our shareholders by way of dividends. We commenced dividend payments at the end of financial year 17, and our financial year 18 dividend yield was a healthy 3.1%, which compared very favourably to our peer group. I also note our growth in earnings per share. Turning to our operations, the Gwalia underground mine is the company's cornerstone asset. If you look at the step up in production rate in financial year 14 and 15, this was achieved through a number of productivity improvements on site by the team, rather than relying purely on higher grade, and this is a high grade operation. And then, as we benefited from higher grades in financial year 17 and 18, we have been able to generate and been in a position to have record production periods during this time. In financial year 18 at Gwalia, the operation generated free cash flow after funding sustaining capital of 255 million Australian dollars. In financial year 19, we have guided slightly lower production compared to previous years due to waste generated through our various capital projects needed to be moved out of the mine, which does, in brief or in low levels, impact the ability to truck ore. I noted in previous slides some of the improvement projects we've initiated at our Gwalia operations through the years. Some of these projects include improved underground ventilation and cooling of the underground using novel approaches by using waste heat generated from our power station to run absorption chillers, which then assists us in cooling fresh air for underground use. We've used ore passes in the underground that allows our boggers to work more constantly and independent of ore trucks, and to remove ore from fried stopes more rapidly, which allows us to speed up our stoping cycle. Similarly, we're using tele-remote bogging ability to also increase our stope cycle and allowing us to access those stoping areas far more frequently. Lastly, we stored a lot of the waste we've generated underground to enable us to focus on ore carting, which is something one of our capital projects is also trying to address. Now turning to Symposium in Papua New Guinea. Symposium has been a fantastic turnaround story for St. Barbara. Initially a complex and difficult operation, through hard work and a lot of effort, it's achieved a lot of success in recent times. This operation has generated 186 million Australian dollars of free cash flow over the past 3 financial years, and it continues to perform very well. The oxide mine life has been extended twice now at Symposium, and we currently plan for oxide mining to cease in June 2020, with a further year of processing oxide stockpiles through to June 2021. From the original ambition of having a 100,000 ounce operation in the Pacific, this has become a very lucrative operation, even exceeding our own expectations. In the financial year 14 through financial year 18 period, there has been significant improvements in operational areas at Symposium. Mining operations have benefited from replacement of mining equipment and the haul fleet, improved preventative maintenance that have increased fleet availability, but also from the focused effort of site employees to make mine activities more efficient. On the processing front, in line with the commissioning of the SAG mill at Symposium, the existing ball mill was retained and refurbished to operate in parallel with the SAG mill, thereby exceeding initial estimates for achievable throughputs at Symposium. Improved understanding of the geology of Symbosium's various open pits have benefited site operations, and ongoing work in metallurgical understanding of the ore body has assisted in achieving improved gold recovery for this operation. With our stable and well-performing operational base in place, St. Barbara's strategy is to diversify the group's production base through inorganic growth and acquisitions. We will, however, be very disciplined in evaluating opportunities to increase our production portfolio. To create long-life, sustainable operations, we are advancing the life of our existing operations with our organic projects that I will discuss in brief next. Ensure we have projects in each of the phases of the growth pipeline and warrant that we actually progress these projects through that pipeline. We cannot achieve success without developing our people, and there is an ongoing focus within our company to develop our talent. We have to be trusted in the jurisdiction in which we operate and by the communities within which we work. I mentioned the capital projects. A key capital project at Gwalia operations that will underpin the life extension of this asset is the Gwalia Extension Project, or GEP. This project involves upgrading of ventilation in the mine to enable mining down to at least 2,000 meters below surface. Ventilation is currently a key constraint in the underground mine. The paste aggregate fill, or PAF system, comprising mixing of paste from surface with waste crushed underground to fill stope cavities. This enables us to keep waste underground and focus on ore haulage. At this stage, the first surface raise bore as part of the ventilation upgrade down to 1,000 meters below surface has been completed, and the second hole is progressing. Raise boring is going well and is ahead of the original project plan. The PAF project is now scheduled to be commissioned early in the March quarter. All the components for that project are on site, and many of them have been moved underground. Overall, when looking at the ventilation and the PAF system associated with this project, the project is on track to be completed by Q2 financial year 20 and within the initial budget of $100 million. The next key project at Gwalia is the Gwalia Mass Extraction Project, termed DMS project by us, which will facilitate life extension at Gwalia. This project comprises a new mining method, an investment in underground crushing, mixing, and material handling, likely hydraulic haulage of ore from underground. GMX does rely on the additional ventilation from GEP, and this is why we're focusing on getting the GEP project done. Key advantages of GMX is that it'll enable us to lift the mining rate from the current 800,000 tonnes per annum we move from the underground likely to 1.4 million tonnes per annum by applying this additional or different material handling option. This allows us to maintain Gwalia's production levels as we go deeper in the mine and we see a slight decrease in the grades of the mined ore. The feasibility studies towards GMX is progressing, and we are looking at multiple hoisting technologies as well as a continue to truck option as a comparison. These studies are expected to be fully completed by March 2019. We will carefully evaluate the outcomes of these studies to select the optimum solution for an investment decision, go into detailed design, and then also warrant proper planning and implementation plans. GMX extends the life for Gwalia to 2031. At Symposium, the key to mine life extension is in the sulfide resource and the associated sulfide processing option. As indicated in this diagram, the current sulfide reserve is predominantly under the red Piggyput pit. The reason we haven't extended the reserve on the green pit in Soraba is because we haven't drilled there, and that's something that we are actively doing now. We believe updated drilling will enable us to revisit our PFS and then also progress to an FS to support an extension of the sulfide operation by next year, Q1. This is just a confirmation of the life of mine of the assets. Gwalia with a life of mine out to 2031, oxide life of mine at Symposium out to 2021, with a high likelihood of extending that to a similar life as Gwalia through the inclusion of the sulfide project. In addition to our organic projects at Gwalia, we have continued exploration to find more ounces at depth and close to the Gwalia ore body. In financial year 18, we completed a surface drill hole down to 2,600 meters below surface at Gwalia, and in the current year, we will also drill a daughter hole to step out 200 meters at that depth. We've done a 3D seismic program in financial year 18 and identified 3 drill targets, which is indicated on this picture, 2 of those which have been drilled, and the results showed shearing and alteration similar to the Gwalia deposit. The 3rd target will be drilled in the current quarter. The modern technology, 3D seismic, hasn't been used on and around the Gwalia deposit until now, and we are very encouraged by the results to date. Briefly touching on other exploration opportunities, as I noted, at Gwalia we are doing further deeps drilling to define the ore body at depth. We are planning to use 3D seismics around Gwalia, but also within the 60 kilometers of ground we hold around Leonora. We are continuing exploration drilling at Pingeon, where we have a large landholding and a prospective belt. At Symposium, the exploration focus is on finding additional oxide and sulfide material on the Symposium island, but also on the neighboring islands. In addition, work is continuing with our joint venture partner in Newcrest, which is focused on porphyry targets on the Tatau and the Big Tabar Islands. We have also invested in 4 exploration companies. The objective here is to invest in early stage exploration through an equity stake in each of these companies, allowing them to have success, which will benefit us. In conclusion, St. Barbara has had record production, profit and cash flow through financial year 18. We are paying fully franked dividends. We have a cash balance of 334 million, and that is continuing to grow, and more importantly, we have 0 debt. We have extended mine life at both of our operations. We have fully funded near-term growth options at both of our operations. We have an exploration focus, and we are very well positioned to grow inorganically.